Hello, everyone. Welcome to another episode of On the Record with me, your host, Tone Vays, here on the World Crypto Network. And with us today is a man named Reggie Middleton, who is the CEO of Veritaseum. And I've actually known Reggie for a while. I've known him for at least 3+ years in the crypto space. But I remember watching him even before I knew what Bitcoin was. He had appearances on Max Kaiser, shows like Capital Account, shows like Boom Bust, which is ironically named as his original company, Boom Bust Blog. And I respected Reggie very much for his views in the financial world, and I was happy to see him join the crypto space. So Reggie, thank you for coming on, and go ahead and tell people a little more something about yourself.
Okay. Well, first of all, you're welcome for coming on. Thank you for having me. I am one of those guys who insist on doing things differently from everybody else. So uh, shortly after graduating college, I tried my hand in the traditional finance method, stock brokerage, financial product sales, etc. And I quickly learned it wasn't for me. So I struck out on my own and tried to sell my ideas and perspective and own products as early as age 23, 22. And that took me on a variety of software endeavors. It took me through the tech crash. I eventually landed in the real estate bubble shortly after the internet bubble. Lots of bubbles in my lifetime. And I started buying real estate in 2000. Before it was a bubble, but in New York, where you had uh, a, a convergence of um, things that caused real assets to really, really grow. And they grew fundamentally. You had gentrification, you had a favorable rate environment, you had loose lending, and eventually that became a bubble. And I think I'm a smart guy, but I'm not a genius. I'm more on the average side. And I noticed that not only I was making money, but everybody was making tremendous amounts of money. And some of the guys that were making money really had no idea what they were doing. It got to the point around 2005, 2006, when 2 plus 2 started to equal 99. And, I'm not a genius, but I know 2 plus 2 doesn't equal 99. So I decided, even though I was in it for long term, to sell off the assets and short everybody who did business with me, basically. That was about 2006. I sold off just about everything. And roughly 6 months later, the bottom fell out the market. It looked like I was prescient, but in reality, it was just 2 plus 2. And fun to get my hands on all that leverage that I saw during a bubble run up. Of course, you had a hedge fund bubble busting at the same time, and everybody was trying to get out of hedge funds and not in the hedge funds. So that didn't work. But because I didn't come from the traditional buy side background of the Harvard Business School, the Goldman Sachs prop desk, etc., I decided to put a blog out just to show everybody, my perspective. I used to write on other people's blogs, such as Nira Rabini, who also became very popular, calling the exact same 2 plus 2 issue. And the blog became very popular among a very small coterie of finance people, and became so popular people were getting belligerent in their requests for information, almost as if they were paying me. So, the easiest way to get somebody to leave you alone is to what?
Charge him.
Right. So you ask them for money, and you won't hear from them ever again. So I think.
Yeah, I'm doing that right now though. I started to, like, I couldn't keep up anymore. I started tone-based consulting service, 0.1 Bitcoin per hour, and you got me because I was gonna it was getting nuts.
Yeah, it is, and I like to talk, and I like to talk my trade, but at some point you like to sleep, and you like to you know do you like everybody to realize that there's value to what you're saying besides of just give me, give me, give me. So I put the paywall up. You heard crickets for 3 days. And then I got a phone call, and it was Morgan Stanley. And they said, if you are you $10,000, we turn on 3 people from ours, strategic trading desk. Well, yeah, of course, because that will help pay my analysts. And then, it's basically positive revenue. That was about 2007. And that was the beginning of Boom Bust Blog. and it's been running from 2007 up until I really caught the Bitcoin bug. And during that run, we had a lot of calls on fundamental and forensic analysis basis. We called the fall of Bear Stearns, the collapse of Lehman Brothers, General Growth Properties, which was the second largest REIT in the country, the whole housing market crash. Of course, that was coming because that was the whole purpose for me getting into the short game on the investment side. We called Google's rise, Apple's stumble, the European debt crisis. Roughly 86 calls all in all.
Yeah. No, Reggie, I remember some of your really good calls. I mean, I was watching you live when you said Apple is going to take a big hit, Google's going to take their market share, and Apple fell from like 700 down to like 450 or 500.
Right.
I remember those well. You made really good calls back in the day. It's kind of funny, your path to here during the 07 real estate crash was very different than mine. I also kind of saw it. I was like fresh out of college, a couple of years. I was starting to trade, and I bet big on. I bought a bunch of puts on the home builders back in like mid to late 2005. And I was a little early, and they all expired, and I lost a bunch of money. So instead, I ended up going to work for Bear Stearns right before they imploded, like I believe maybe 13 or 14 months. So it was a very, it's like what a difference 1 year makes, right? If I buy those puts 1 year later, I probably never end up working on Wall Street.
Yeah, I mean, timing is everything. What we did, especially, I remember Bear Stearns is very interesting. That was 2007 is when we started, late 2007, and we really got into it in January of 2008. And what I remember,
I got my job in February of 07 at Bear Stearns.
Oh yeah, I mean, just to recall that trade just quickly. I remember buying the puts. We're averaging about 86 cents a contract. I was buying them out of the money, way out of the money. 3 to 6 months of time value, per contract at a time. And, I'd roll them over because I was very confident. As I put the research out, is this the busting a bear, it was called. I actually got a lot of incoming contact from Bear Stearns managing directors, but it was actually benevolent. They were basically inquiring about the report, asking me a lot of questions. The reason was apparently they had a pretty stern vesting schedule, and they had a decent amount of wealth tied up in Bear. And I explained to them, just read the balance sheet. Apparently, not many people do that. Everybody listens to management. Nobody reads the actual reports. And those puts went from 86 cents to about $76, I think, roughly. 40 average, I'd say, but 40 to about $76. An amazing game. I woke up one morning and I looked at my phone and I saw all these zeros in my account. And I was like, damn, Windows Phone, Windows doesn't work. I kept rebooting it. And then I looked at the news. I'm like, oh, okay, I see. Okay. So that's a long-winded explanation of my background.
All right. Yeah, let's get into the blockchain space. Very, very quickly. So what brought you here, and what did you see the innovation with Bitcoin and blockchain?
Okay, so for about 2 years, as I was doing, other things in terms of analysis and investing, I had clients who were asking me to look into Bitcoin, and I was pretty much ignoring them. I don't have time, some of the time later, et cetera, et cetera. One day I did take a look, and being that I was in the media a lot, mainstream media as well as the fringe, I knew that, probably best I did some primary source research. So I went straight to the Bitcoin wiki. I read the white paper, Satoshi's white paper, and the wiki.
And what year? What year was that?
2013. I was late to the party. Okay. And when I read the wiki, my jaw hit the ground. I couldn't believe it. I'm looking around like, did anybody read this? The part about smart contracts, went straight to my brain, And it felt like the world, the epiphany, light bulb went up, and I heard, that special spooky Catholic music in the background. And I said, this is phenomenal. And so I thought I had missed the boat, because the fact that you had the concept of portable value that had its own transportation rails, independent of money center and central banks, and can be programmed via smart contracts is phenomenal. So I said, this has been out for years, and I'm like, apparently I missed the boat. But I called around to, the Mike Hearns and the, other prominent developers of the time, and they said basically we have a couple of beta examples of code, but there's really nothing running. I'm like, it's impossible. I didn't believe anybody actually. So after about a month and a half of due diligence, I found that they were telling me the truth, and I said, there's a business opportunity here. So I actually decided to shut the blog down and go full time into the Bitcoin crypto sphere, because I felt that the current extant world of finance, of capital markets, is now soon to be obsolete.
All right, so you see the smart contract angle of the blockchain as like most critical to you. So what exactly is a smart contract? It's actually not an easy definition. It's like the definition of a blockchain. It's kind of, you ask 10 experts and you get 10 different definitions. So what is a smart contract to you, Reggie?
Well, I would be the 12th definition because I'm not an expert. I'm a perpetual student, and I look at things in terms of 2 plus 2. So the smart contract, from my perspective, is code, right? Executable or code that can be run that takes the place of a social or a legal contract or a social or legal agreement. So Tone decides to do X, okay, and I decide that if Tone does X, I will do Y. That could be a social contract or social agreement, or it could be a legal agreement, written or oral. We can congeal that into computer code and put it up on the blockchain, and it could be automated, okay, and it could be self-enforcing, okay, self-administering, and it can be autonomous. So that means when Tone decides to do X and I decide to do Y, and Tone decides to change his mind, to lie, malfeasance, etc., the contract makes that impossible, particularly the way that I think it should be done by being escrowed and pre-funded with assets up front.
So what is the reason why it has to be on a blockchain, right? Because can't a trusted party like Google enforce a smart contract where neither party, you or I, can like change the code in this contract unless we have, I mean, I'm not counting, like one of us has like a brother at Google and we can get him to like change terms, like taking that possibility out of like, unless that is your biggest worry, right? Like if that's not a worry, wouldn't a centralized platform to execute a smart contract between two parties be more efficient than a blockchain, or no?
Well, I don't understand the language you're using, because you said trusted party, and you either be trusted or a party. You can't be both. So, and that's
well,
my
okay. So let me put it this way, right?
Explain that.
Okay. Well, let me just rephrase the question a little bit. I actually trust Google more than I trust Ethereum. Maybe that would help.
Okay, you trust Google more than you trust Ethereum, but realize you're already now having gradations of trust. So you can't say you trust Google. You just say you trust Google more than Ethereum.
Correct.
So that goes to the initial point. The only one you could truly trust is probably yourself.
Agreed.
You can like something, you can have confidence that something or someone may act in a certain way given XYZ condition, but you don't know when XYZ condition will be extant. For instance, Google can be full of nuns and holy people who will always try to do the right thing. Google could get hacked. Or it could be full of, security experts who are close to impossible to hack, but they could be thieves. Or they could be nuns and security experts, but a regulatory body or a government agency can confiscate data. So instead of worrying about ways to mitigate reasons why you shouldn't trust them, a smart contract put on a blockchain that is relatively decentralized, hopefully fully distributed, eliminates all these variables that you have to worry about. And that elimination is a significant decrease, if not almost elimination, of the counterparty risk and credit risk that causes friction and the expense in capital markets today.
Okay, I mean, I could push back a little bit on it, but we are short on time. Maybe we can have this discussion in another time. Okay, so let me ask you another follow-up. What do you think about Turing completeness in smart contracts?
Okay, this is coming from a non-software engineer, but
Of course, neither am I.
okay, this is the plus and minuses. The plus is you get to do a lot more. The minuses is the people who want to break it get to do a lot more. So um, the if you can uh, win the whack-a-mole race, it's a big plus. And if you can't win the whack-a-mole race, well then the moles will sooner or later get the better of you. Now,
Okay.
whether that's possible or not, or I'd say probable or not, is potentially out of my realm of expertise. I do have my opinions, but I'll keep them to myself because they're grounded more in uh, more in my opinion and less in actual, empirical analysis.
Gotcha. Well, just so you know my view on it, because this will come up in a minute when we talk about what Veritaseum does, is I think that smart contracts are useful, but decentralizing a smart contract on a blockchain, you should only do it if there is a censorship resistance problem. If censorship is not your primary concern, then I think a centralized, trusted third party where you can locally encrypt the data so that the data itself is not at risk of being handed over to third party, to additional parties, is a more efficient system. But your view is slightly different.
Also, I can't even understand the language you're speaking. Trusted party has to be a party you're trusted. It's very difficult to be both. So,
Okay, well, no, you see, I trust my email provider, right? My email provider is Proton Mail, and my email is locally encrypted, right? As long as I trust them that their code allows me to encrypt my email before they store it on their server, I trust them to continue operation and not have the ability to read my email.
Right. I'm a majority shareholder in Proton Mail, and they basically do as I ask of them.
Right. Is that what they do, or do I have a misunderstanding of how my email works?
Do you see how when you ask that question, if suppose I was, and I could be majority shareholder, suppose I have a backdoor written in, okay, now doubt is introduced. The reason doubt is introduced is because Proton Mail, your provider, cannot truly be trusted. They may be trustable, but they cannot truly be trusted.
Well,
Do
no,
you understand?
I understand that, but
Yes.
I understand that. That's why I mean they're pretty public about what they're doing with the way they've coded up their email, and I expect other smart programmers would have called them out on it by now because they do provide client-side encryption of their emails.
Right. And I'm not knocking Proton, wonderful product, but you know, the perfect in a perfect world, you want to eliminate as many downside variables as possible. Okay. Basically,
Okay, no, I agree with you.
and,
I agree with you.
and if you don't know it, that if it's an unknown, it doesn't necessarily have to be negative, but you don't know that it is. So that's it in a nutshell. You want to eliminate as many downside variables as possible.
I agree with you, but sometimes it comes at a risk of forking, which we would anyway. We'll get to that in a minute. But let's talk about Veritasium. Let's talk about what Veritasium does and what problem it solves in the world economy, and why do you think it would be very useful for people?
Okay, I describe Veritaseum as the window or the key to the peer-to-peer capital markets, and the peer-to-peer capital markets is my own marketing euphemism, but a simple description of the ability to uh, transact directly. Peter transacts directly to Paul. They give you an example of how things are done historically, and today, particularly in modern times, you have a highly centralized hierarchy where you have a central bank right in the middle, surrounded by, and we're going to talk in terms of U.S. and for a lesser part, the EU, Greater Europe um, financial systems and Greater Asia. You have a central bank surrounded by very small coterie of powerful money center banks. Okay, between the central bank and the money center banks, they pretty much control money and capital. Outside of and think in terms of a circle, a sun with a circle around it and concentric circles outside of that. So you have the money center banks, you have the central bank, the money center banks surrounding it. Then you have national banks surrounding those money center banks, and then you have regional and local financial institutions, brokerages, etc., exchanges, etc. The power and the power and the capital is concentrated heavily in the central banks and the money center banks. So in order to do something of significance, and oftentimes in order to do anything at all, except for take, a dollar and give it to somebody else, you have to go through or do it at the behest of that tight concentric circle in its center, money center banks and the central bank. That's the capital markets we have today. That's the capital markets we have over the last 100 years or so, okay, since the central bank was created. The peer-to-peer capital markets takes an erases that entire platform, and it's very simple. You have a whole bunch of dots, and each dot can be connected with a line, and that's the capital concentration, and that's the ability to do business. That's the path of value. Peter does business directly with Paul. Paul does business directly with Paulette. Peter could do business with Paul, Paulette, Susan, and Carrie, and vice versa. Veritasium as a platform allows you to do that, and it allows you to do it via tools such as smart contracts and blockchains, et cetera, et cetera.
Okay, so so give me an example of a contract that would take place on Veritasium.
Okay, I'll give you an example of the legacy contracts that we built when we first started. This is the peer-to-peer value trading, where the system replicates the functionality of an exchange and a brokerage. So Tone Vays wants to trade $100 worth of IBM stock for US dollars. Normally, you go to your stockbroker, say Merrill Lynch. If Merrill Lynch charges you a nice fee for that, Merrill Lynch takes your US dollars, right? And you lose custody and control and possession of US dollars. And then it sells you basically a derivative of IBM stock. So it sells you, I don't know what IBM is selling for, but let's say 5 IBM stocks.
Yeah, IBM fell about 6% this morning from 170 to 160. I know it because the trade worked out for me very well.
Okay, so they sell you as right now, then they sell you roughly 0.6 IBM stocks, 0.7. Okay, you don't get the stock certificates for the most part. You get an IOU, and you still don't have possession, custody, and control of that. The bank still has that. You have an IOU, which gives you exposure, okay, to that IBM stock. Veritasium is very different, where you have a counterparty, okay, that you can find through the Veritasium system, or you can locate on your own and have them go to Veritasium. And then you use Bitcoin as the medium of exchange, and then you exchange the exposure of $100 of US dollars for $100 of IBM stock. So you essentially go short US dollars, long IBM stock exposure. The other side goes long US dollars, short IBM stock equity exposure. And you put your capital into the Veritasium wallet, right? You agree, you fill out a very simple form of, written in plain English, and maybe about 8, 9 inputs. Time to cancel, expiry time, leverage, multiplier effect, etc. You hit agree, everybody agrees, the capital goes into the blockchain. You have our version of a smart contract, okay? Nobody can break this agreement. So if you decide you don't want to pay, you can't. The other side decides they don't want to pay, they've already committed the capital to the blockchain. You can go bankrupt. The capital's still there. The government could come in and say, well, Tone Vays owes a $200 judgment, so we're going to freeze it, but they can't. So this agreement is now etched in stone until expiry. At expiry, profits are given and distributed, losses are distributed, and assets are returned to everybody pro rata. That's number one. And that was done without an exchange, without a broker, without a bank, without anybody, just the two parties, the blockchain and Veritaseum software. But something that's a little more, example number two, is what we're creating. We're recreating the infamous DAO from last year, but we're doing it from a financial perspective. The DAO was created by software programmers and engineers, so they did it from programming perspective, program, a programmer's perspective. So we're doing it from investor and analyst and a financial engineer's perspective. And what we're creating is autonomous pools of capital exposure. So we're creating a smart contract. The smart contract will take our tokens, Veritas tokens. So if you want to send capital into the contract, you buy the Veritas token.
Okay, we're going to get to the tokens in a minute. I don't want to get too far ahead because I just want to try to sum up what you just said, because if I understand it, then my viewers will understand it as well. So a person would download the Veritaseum client locally on their machine, correct?
Right.
So then
it'd be very light, so it'll be a web page, but you'll have an interface on your client.
Okay, so it's either a web page, like my current trading software does that too. I can trade through the web or I can download a client, but that doesn't really matter, right? I decide, so this is basically, you're actually probably the first person I've spoken to in one of these that may know the difference between a futures contract and a forward contract and a CFD, right, Reggie?
Yeah, I hope I'm not the first, but if I am, then so be it.
Yeah, you'd be surprised. A person gets to create. I mean, I set the rules, right? I mean, like if I wanna go long IBM, I would basically put in my terms of the contract and I throw it out there. I put the collateral up, so it's 100% collateralized, right? Not like the futures market where I only need to put up 5%.
It's 100% collateralized. You can even go
100%. Okay, got it. So I put up the full collateral on that basically on that contract, and then I wait for any counterparty to pick it up. So there's no market makers here, right? I'm just like waiting for someone like me or on the other side who wants to take the opposite side of my contract.
Right. In the prototype, that's correct. There were no market makers. As we get it going, there's a role for market makers to provide liquidity, of course.
Got it. So I'm sorry. So let's get back to the collateral here. So
okay.
I'm actually picking the distance IBM would move, right? Because if it's an open-ended contract, I either have to put up an infinite amount of Bitcoin to cover, IBM, solving the galactic space travel and the stock going to $800,000 per share, or I got to put up enough collateral for IBM to go to zero, right? Or do I set my term? I only want to trade this thing until IBM either loses 5% of its value or 10% of, or like gains 5% of its value, and then I only need to put up the collateral for the maximum amount I can actually lose.
The way it works is this is a counterparty risk-free system. In order to make it counterparty risk-free, everything always has to be fully funded. So if you were to suppose you would go long IBM $100, okay, and I take the other side of the contract, we go short.
It's not open-ended, right? There is an end date and there is a max gain loss there, right? Otherwise, I got to put up infinite amount of collateral.
Right, and I'm going to explain it. The max gain loss is set at 100%. Okay, so you can only gain what you have at risk. You can only lose what you have at risk, the capital at risk. The reason why you have these capital at risk limits is because if you can gain more than the capital at risk, then there's counterparty risk and credit exposure, because now the other side has to somehow be assured that you're going to pay if things don't go your way, or vice versa. So
got it. Do I get to choose leverage? Do I get to choose my leverage, or is it always one-to-one?
It's up to you. It's a digital leverage multiplier, and you can put in any number you want. But it works differently from what most people are used to. It is leverage technically and mechanically, but it's a multiplier. So what the leverage does is it increases the volatility of the trade. So let's suppose you want real action in IBM. So you put 20 times leverage in. So for every basis point that IBM stock moves, this trade will move 20 basis points. Okay, so you have real leverage, but once someone exhausts their capital in escrow, then the contract unwinds, even if the contract hasn't reached its expiry date yet. So we go into a 3-month contract.
Gotcha. I gotcha.
Okay, there you go.
No, I understand. I understand. Okay, I think our users do as well. I mean, like I mean, I trade something similar, right? I mean, are you familiar with the website called One Broker?
Yes.
Right. So, I mean, they're centralized. So all my Bitcoin is fully at risk. They can walk away with it. They can get hacked. So I understand all that. But one of the things that makes it kind of useful, I feel, is that they don't let you trade anything in the world, and they standardize what you can and can't trade. I mean, thanks to Bitcoin, you can do it in any denominations. But I think one of the problems is, if anyone gets to set their own terms, it's there's infinite amount of choices they can throw out there, and finding a counterparty may be difficult. Which is why in something like One Broker, they're basically the counterparty for everyone.
Okay, I don't consider that a plus, because if One Broker is a counterparty for everyone, right? That means let's make a simple math equation out of it.
Oh no, I'm not saying it's a plus. I'm just saying that I immediately enter my trade the moment I want to enter it, as opposed to a platform where I gotta wait for someone else to like my terms.
Right, and you don't necessarily have to wait. So we're discussing a prototype. So we put this into production. Okay, we plug the Veritaseum system into the back end of an exchange, even One Broker. Now, all the deal flow and all the order flow from One Broker flows into Veritaseum. Veritaseum has whatever liquidity that One Broker has, or let's say we're very successful in business development marketing, or the liquidity that Charles Schwab has, or you plug in the exchange discount broker of your choice, such as FXCM, etc. You could trade any asset class, and you can get very fancy. So if you want to get a bespoke contract, such as you want to go long the euro dollar pair, short gold over the gold and silver pair, you can actually do that. Okay, but you realize that that particular asset combination for a particular amount of time at 24 times leverage is not going to be very popular. So you either have to.
I agree. Yes.
Right. So you either have to have a broker find somebody to do that, or somebody who wants to take that risk. Now, this is the way it's done right now. You have JP Morgan, who does a lot of credit default swaps. Okay. JP Morgan has a client, a hedge fund, an energy hedge fund. This energy hedge fund says, we're looking to go long Pacific Northwest electricity exposure. That's what we want. We want to buy it. Okay. Not a lot of, people in the market, especially mom and pop retail guys or even hedge funds, want to buy that. But this particular hedge fund wants it. JP Morgan picks up the phone, goes through the email list. They say, okay, we have somebody for you because we happen to have generation company, electricity generation utility that's looking to hedge their exposure. Okay, so they put these two parties together and they put them into a swap, and they charge an enormous amount of fat and basis points to put these two together.
Right. All right. So sorry, Reggie. I do want to interrupt you because I have you for only a limited time, for only 20 minutes. But you did mention they will charge you. So how much would Veritaseum? How much of a cut does the platform take for facilitating these contracts?
The platform, as the prototype was built, was 5 basis points up to 25 basis points. We're experimenting with the pricing. We were probably considering even going free for everything and inverting the entire business curve. So we charge on complexity of the contract.
How would it make money? How would you make money?
Well, on complexity, right now you make money at 5 basis points to 25 basis points.
Right.
Our cost is significantly lower than everybody else because of the blockchain infrastructure. If we start with a basic zero cost, then we charge on complexity of the contract. So a simple US dollar euro pair would be a basis point, if not free. But if you want to go euro dollar versus silver gold with say Bitcoin underlying exposure, well, then that will have a higher charge.
Gotcha.
So
And is
more cost.
and is all the value, like, is Bitcoin underlying everything, or you can choose? Let's say I want Dogecoin as the medium of exchange of the contract, or is it Bitcoin only? Like, because I think that's what you plan to do originally, but I'm not sure anymore. So is Bitcoin always the medium of exchange on your platform?
So remember when we started, this was December 2013. Nobody was really doing smart contracts. So it was Bitcoin then. Now, especially with the move to Ethereum, we have many more tools. Plus, the industry in general has gotten more mature. So and just bear with me, give me like a minute to explain this. So I was explaining the second product that we're spinning out, the Digital Autonomous Organization, the DAO. We're creating software pools. Okay, these software pools allow those who enter in them to gain exposure to whatever the software pool purchases. Okay, so this is like a different spin on the smart contract, where this smart contract is much more autonomous, where the previous one relied solely on inputs from two parties. So you purchase, our token, you send it to the software pool to buy exposure. The software pool acts as Skynet for Wall Street. Remember Skynet from Terminator?
Sure. That didn't work out too well.
Yeah, again, I don't plan for this to work out very well for Wall Street either. So it should be about the same thing. So this software pool buys tokens from other entities and other digital assets. So let's say it buys a little Ethereum, it buys a little economy assets, it buys Augur, etc. Okay, exposure to Bitcoin, exposure to Dogecoin, and you have what is essentially aggregate exposure. Okay, this is something that will compete directly with like a hedge fund, such as Blockchain Capital, or if the more advanced more extant hedge funds come in, they'll compete directly. But because just like we cut costs with the swapping exposure, because there's no bank overhead to pay, they pay about 60% of gross revenues and compensation. There is no asset manager to pay because it's a software. So you'd have, say, a flat 5% fee where everybody else is charging 2% of total assets plus 25% of gains. So this aggregated pool of exposure competes with mutual funds and hedge funds, private equity funds, and venture capital funds. The software, the reason why I call it Skynet, it will have the ability to perform as an asset manager. So suppose Tone Vays wants to launch Tone Coin, okay, or Tone Platform. Let's forget coin because that's old vernacular and it's misleading. The Tone Vays platform.
I mean, I've been thinking about launching a Tone coin, but yeah, well, let's go with the platform.
Okay, and so they say they want to go up to the Veritaseum DAO, okay, and they would like that Veritaseum DAO to basically, throw some capital their way. They can actually apply and send questions to the DAO to answer as a screening platform. Have you done X? Do you have X capital, et cetera? The DAO, analyzes these questions, right? If they pass muster, then the DAO contracts out for research from us. And then we do our very, very advanced screening. The same thing that found Bear Stearns, the Lehman Brothers, and Apple, and Google, and GGP, and, the European debt crisis, et cetera. Okay, the answer is the answer. If everything passes muster, then the DAO invests in this company. And it does.
Okay, but Reggie, but everything you just described has absolutely nothing to do with the Veritaseum smart contracts swap platform that we talked about earlier, right? Or, I mean, that's fine. I just want to make sure I'm not totally confused. This seems like a completely different business model through a completely different platform, even though they're under the same company owned by you, but they're unrelated to each other, right?
Not at all. It is value transfer using smart contracts. Okay. The first one is over the counter peer to peer. Okay. Right. The second one is
an investment vehicle.
It's a value transfer vehicle. Okay. Investment is sort of a hot term, etc. Value transfer is more descriptive and more accurate.
Oh, okay.
Okay.
All right. So like I said, I have you for a little bit of time. We have to talk about the token. So the Vert, actually, I'm not even sure what it's going to be. And from reading your terms and conditions, you're not sure what the name of it is going to be either. It's either VE, VER, or VERI. I actually hope it's VER because I would love to see, like, Roger Ver potentially try to sue you for like name infringement, which may not be funny for you, but I would find it kind of hilarious.
Okay. Well, the four digit naming convention gives it VERI, but you can figure it out. 2, 3, 4. You know how to spell Veritas, so that makes it very easy.
Right. Yeah. Right. Because and the reason I say that is because that in your terms and conditions, you actually like potentially name all three of them.
Right. There's the actual ticker name, and then there's a short name that's given in the actual description. So if you're looking for an actual ticker name, the ticker name will be there on the day of the launch.
Gotcha. Okay. So
Okay.
what?
Now,
I'm getting confused. Do I need this token to execute my IBM contract on your platform?
Okay. Now, before you go on, you did say that there were two products that are totally unrelated, and I don't agree with that.
Okay. So please try to explain to me one more time how these two things are related to each other.
Okay.
I just didn't get it.
Okay. Do you remember when you first asked me what Veritaseum does? I said it enables the peer-to-peer capital markets. It enables one individual, right, to trade value with another individual directly. Okay.
Mm-hmm.
Without the trusted party, without the middleman, without the intermediary. So when you go through the original prototype, you're able to trade extant financial asset value peer-to-peer. You never had to contact a bank, a broker, or an exchange. Okay. The second product essentially does the same thing. It gives you the ability to gain access to a pool of financial assets and digital assets, again, without having to contact a bank, a broker, a private equity fund, or anything else. And it does the same thing. So basically what we're doing is we're taking out the gatekeeper or the rent seeker, which is, and you could plug and play what you want, the bank, the broker, the exchange, the hedge fund, the venture capital fund, etc. It's the same premise. Okay. One is peer-to-peer, 1 to 2. One is multiple entities going into a common contract. Okay, but it's the exact same premise, peer-to-peer capital markets.
Okay, got it. So now let's talk about the actual token. So you are using the Ethereum platform to launch the token, right? So in order for someone to purchase the token, they would have to go first and purchase Ethereum and then convert Ethereum into the Ver token.
No, in order to purchase a token, you take Ethereum or you take Bitcoin with many Ethereum wallets and do the conversion, and that allows you to purchase the token, the Veritas token. We call it Veritas, and the Veritas token is based on Ethereum, ERC20 Ethereum.
Right,
token.
but that's just a coding standard. There's that's about it. There's no as far as I know, there's no regulatory fully approval for this to be any kind of an asset, right? That's just a coding, like an Ethereum coding standard.
Right. It allows us to put a token on the Ethereum platform. Okay. And the reason we're doing that is Ethereum has a richer programming environment. Okay. Now that you have this token, there's a matter of what can you do with the token? Well, the token will be reporting the Veritaseum value trading platform, the digital value trading platform, reporting that over to Veritaseum, all these names, to Ethereum. Okay. And that would be powered by the Veritas token. We're creating the software pools, the DAOs, right? The only way to access that would be the Veritas token. And the Veritas token will be pure financially driven. So I have one potential client who's looking to do very large transaction, plain vanilla, but very large in a particular way. So they would use the Veritas token. We'd lock the Veritas token into euro and dollar exposure. So there'd be no fluctuation. So we know one token equals $1 at all times. We know the Veritas euro token will always equal €1 at one time. Okay, and then we do the transaction according to his terms. Okay, so these tokens.
Wait. How are you able to guarantee that? How are you able to peg the token to the value of a euro?
That will be our secret sauce for right now. But realize that we've been working on this for a long time. I believe that we were the first ones to not only apply the smart contracting technology to capital markets, but the first ones to apply for a patent protection for the IP. Many years ago, before all the banks and technology companies, etc. So there are definitely ways to do it, and there are ways to do it totally above board with the full blessings of the laws as they're written for right now, at least. So in doing that, that allows this large, well-versed, well-heeled financial institution to move these assets back and forth, across different boundaries, jurisdictional, geographical, etc. That's one use case. The other use case is the actual software pool, which we call the DAO, and then there's the value trading. We could actually combine these together, because once this entity that I'm discussing makes this move, suppose he wants to then transform this dollar or euro token, Veritas, to gain exposure with any other assets, such as he wants our curated digital asset pool for ICOs and digital tokens. And then he takes his Veritas, okay, he trades it in for the ICO Veritas, and he has it in one trade, just like that.
Okay, I'm still okay. So let's talk about the potential use of the token. I know I only have you for like 5 to 10 more minutes. I wanted to get to a lot more of these. I do want to talk about.
I could run 10 minutes over because I was a little late getting in. So.
Oh, excellent, awesome. Okay. In this on this website here, I can click on your purchase agreement, which I did not have a chance to read, unfortunately. I jumped right into terms and conditions. It was a 20-page document. I made it through the first like 10 to 15 pages of it, but I certainly got the gist of it. And I wanted to just have you comment on a couple of things if you can. I know your lawyer isn't present, but because these are the people that usually put these things together. But let me go into here. Zoomed in too much. Okay. Let's see here. You further present and warrant that to the extent permitted by law, you are authorized to purchase Veritas in your relevant jurisdiction, are of legal age to be bound by these terms, and will not hold Veritaseum Inc. Patent affiliates. So how are you able to enforce this? Because I'm not sure. I mean, I always thought that Ethereum had an illegal security sale. That was my view of Ethereum, because they sold a token that fluctuated in value, and way before their platform was even created. And one of the problems that I always had with it is, how do you know who's buying it? How do you know who's trading it? Because they are bearer assets. And it looks like in your terms of service, there's something similar here. I mean, like, people are supposed to be able to self-enforce on if their jurisdiction allows them to buy it and hold it.
Well, I am not going to get into a discussion of securities law, particularly international securities law. So, that won't happen. But we are simply describing what Veritas is, and it's a software token. It is software that allows you to access the system, right, to do certain things. Okay, we are not alleging or even suggesting that Veritas is a security. As a matter of fact, when you suggested the previous system was a way of investing, I deferred and or disagreed. And basically, Veritas is a way of accessing a software platform that allows various ways of value transfer and exposure access. So, it is a difference. I don't believe it's our job to enforce terms from the buyer's perspective. We're simply making it very clear. This is our product. This is what it is. And if you want to buy it, you buy it under these conditions.
Gotcha. Well, I was mostly speaking for myself, why I never considered the Ethereum. Why people still make fun of me today that Tone, you missed out on Ethereum. You should have bought it at the crowd sale. But I specifically gave my reasons as to why I never thought Ethereum was a good investment because of that. It's very possible I was wrong. Well, financially very possible. We'll see long term if it's possible. So here I don't know what page this was on, but this explains the use of, or like the purpose of the token, and it's twofold. So it's prepaid transaction fees for the use of operation of the Veritaseum platform. This value trading system is currently operational as a beta. These prepaid fees and access to and use of the system tokens will be redeemable once the system is out of beta. And the second purpose is prepaid advisory or consulting services provided by Veritaseum regarding the application of the Veritaseum platform. So there is two questions here. So for the first use case, the fees the platform going to be charging will be in the form of the Verita token. That's the question to number one. The question to number two is, how are the advisory consulting services denominated? Are they denominated in Verita tokens, or are they denominated in dollars payable in Verita tokens?
They'll be denominated in the tokens, okay? And the price will be set dependent upon, supply and demand. You have to understand that advisory, at least, advisory and consulting is not platform scalable. So a token could be put on a platform, it could be multiplied, and you could basically create as much supply as necessary for demand. But so many people could contact our analysts and get 5, 6, 10 hours of time, because there's only 24 hours in a day. There's only maybe 6 to 10 man working hours in a day. Okay, so you do have a supply demand issue there. Okay, and it works just like any other person-based labor situation. It's based upon availability. Okay, the lower the availability, the higher the price. The higher the availability, the lower the price, considering demand.
Okay, so you would adjust the price, because right now I charge 0.1 Bitcoin for consulting, and I know that if the price of Bitcoin goes up, I'll probably get less consulting. But if the price of Bitcoin crashes, I may have a bit of a problem, right? Because people are going to pay, let's say, $10 an hour for my service if the price of Bitcoin, let's say, falls to $100.
Right, but we can also lock Veritas. You can't lock Bitcoin. You can lock Bitcoin, but it's it's an effort. So
what do you mean by you can? Oh, you can set a minimum floor price for Veritas.
Yes.
Okay, and how? Again, I have to follow up. How is that the secret sauce of how you would be able to do that?
No, that's not the secret sauce. It's just an ability to do it. The secret sauce on locking for fiat currencies, etc. I'm not prepared to make that public right now, but it's quite doable, and it allows those outside of the relatively small crypto space to participate. But with the Veritas, it's a matter of agreement. So we agreed to offer XYZ hours at, say, issue price of Veritas.
Oh, okay. Okay. I see. Okay, so back to number one. So the platform, the Veritaseum platform fees are going to be exclusively charged in Verita tokens. Like Ethereum charges fees exclusively in Ether tokens, right?
Mm-hmm. Well,
so
that's a statement. It sounds like it's not a question. So the access will be exclusively Veritas. Okay.
What does that mean? What does that mean, access?
The only way to get into, say, our software pool, I don't want to call it the hedge fund, but the software pool that can compete with the hedge fund. The only way to gain access,
like the DAO investment vehicle.
Right. Okay, and the term investment, again,
the DAO capital allocation vehicle.
Yeah, we simply call it. We're granting exposure to other assets. okay, through our vehicle. That's what we're doing. Okay, and I don't want to sound like I'm playing games, but
Well,
that
no,
is
no. These are legal. These are legal terms. You have to be careful in how you say it, because you don't want to get busted on a technicality. I wouldn't want you to.
and I'm not a lawyer. So I come up this vehicle, this software enables you to gain exposure to other bits of software. Okay, and it can do it at very, very low cost relative to the legacy way of doing things, such as a hedge fund. Okay, the only way to gain access to that is to use our software token. Okay, that's exclusive. In terms of fees and payment, that's flexible depending upon the vehicle that's being used, the way we architect it, how we put it together, etc.
Okay, I just I've been having I've been given a hard time to pretty much everyone that's trying to do this, because to me, here's what it almost sounds like to me. Where would Netflix be today if they charge you a subscription in Netflix stock instead of in dollars? Like you see my minor problem here, right? Like why? Yeah, Reggie, still with me? Reggie? Did I lose you?
Hold for 1 second. I want to call. Yes, can you hear me?
I can. I don't know if you're talking to me.
I'll call you right back.
All right. Well, we lost Reggie there for a minute. He'll be back. I don't want dead air. I don't want to push on Reggie too much. I've been losing friends left and right in this space because they've been launching projects that I don't necessarily very fond of, but you can say that about any project in general. So hopefully Reggie will be back. But the question that I posed to him that he didn't get a chance to answer was for part one, which is if the transactions are in Veritaseum in Veritoken, understand like where would we be today if Netflix charged for their services in Netflix, stock or a currency that they happen to create, right, or in Netflix points, right? Where would we be if, let's say, an airline, I don't want to pick on, United's been picked out, or like American Airlines, right? If American Airlines charged you for their plane tickets in American airline points that were then openly traded on, unregulated or quasi-regulated exchanges. It's just like these concepts don't really make sense to me. So I hope Reggie would be back. In case Reggie is not back, these were some of the other graphics that I had selected from the terms of service, where the price of Ether, price of a Veritoken, is originally set at 0.033 Ethereum per Verita, and the sale would begin next week on April 25th. The other issue that I really wanted to ask Reggie is that in this section, it says the baseline retail price of Veritas will be set by Veritaseum at a so-and-so price. And then it goes on about how the earlier you buy it, the better of a deal you get. But then the last sentence says, Veritaseum Inc., at its sole discretion, periodically adjusts the retail price of Veritas in terms of Bitcoin to respond to changes in business requirements and environment. And I found this to be very confusing, because if the price of Verita is set in terms of Ethereum, at which point does it get adjusted in terms of Bitcoin, and how that how does that work? I'm sorry, I don't understand. I just have more questions that I possibly have answers. Here's another thing that I highlighted. Veritaseum is conducting at least a portion of the Veritas sale via the Ethereum platform, but it doesn't talk about the rest, right? So what happens to the other portion? Again, some answers that I would have liked to hear from Reggie. If he comes back, we will get to those. If not, I will leave this open-ended for the video, for the viewers to maybe look into. Also, the part I have circled at the bottom, the purchaser agrees not to hold any of the Veritaseum parties liable for losses incurred by any party, entity, corporation, or group, individuals, or groups, or losses caused by a failure of any third party service or technology used in facilitating the Veritas sale. And I didn't even know why I had this highlighted. It just felt like it's a lot of, well, we're not going to be responsible for all this other third-party stuff, which seems to be all over the place, including Ethereum. Sounds like Ethereum is also what classified as a third party. But if you go back to the beginning of my conversation with Reggie, all you heard was how third parties need to be eliminated. Yet there's a chunk in, of terms and conditions absorbing all, it's not our fault when third parties fail. But I thought this whole venture was to eliminate third parties. So again, there's just like a lot of questions that I would love to have a concrete answer to. This was actually like one of my, I don't want to say favorite things to read, but this is the one that gave me the biggest puzzle. And I really wish Reggie was on here to talk about these things. Again, these are just questions I would love to know the answers to. Basically, if you just read this, risk of regulatory action in one or more jurisdiction, and it says, and this is going to go to audio, which is why I'm reading these out loud. I know the video people can read this as well, probably better than I read English. But so I will read this for our podcast listeners on iTunes. So this section is titled Risk of Regulatory Action in One or More Jurisdictions. And it says, cryptocurrencies have been the subject of regulatory scrutiny by various regulatory bodies around the globe. The Veritaseum platform and Veritas could be impacted by one or more regulatory inquiries or regulatory action, which could impede or limit the ability of Veritaseum Inc. to continue to develop the Veritaseum platform. And this is where I wanted to read the rest of the page as to, how legal actions in jurisdictions would affect me as a token holder, but the section kind of ends. So this creates my biggest question mark out of everything in the, like, I don't know. I don't really know how to even comment on this. I'm kind of stuck. Also considering that on a prior page, the token holder is liable for this, which bothers me a little bit. And then, the risk of the Veritaseum platform as developed will not meet expectations. And I thought I saw a part that says, it's possible to the final completion of the Veritaseum platform, I believe, is scheduled for the end of 2018. So that's like more than a year and a half away. So it's kind of like Ethereum, right? I missed the boat on Ethereum because I was on my assumption was that they're taking in $5 million. They will never actually finish the platform. To my surprise, they finished the platform and it launched, and now seems to have found its niche by allowing people to create ICOs on it. But yeah, and this final one, even though I did have more, jurisdiction of the sale, and it says the legal entity conducting the Veritas sale is organized in the state of New York under the laws of the United States. So again, this is, I don't know. I just I was going to ask him how he got around the bit license situation, because I can swear, if my memory serves me right, the bit license specifically had a section there for additional creation of other tokens. It wasn't specific to Bitcoin. It kind of encompassed all future cryptocurrencies. And the bit license was launched at a time where even I was way more favorable to altcoins than I am now. And at the time, I remember thinking, wow, if this bit license had existed, Satoshi would have broken the law by creating Bitcoin. And it seemed like that bit license prohibited creation of Bitcoin-like tokens. So I would have been curious how Reggie got around the bit license, considering this specifically states New York. Now, in Reggie's defense, he did tell me he had another call at 1 p.m. Eastern, which was 10 minutes ago, which is why I really wanted to get to these things earlier, but we got into other discussions. I apologize to the viewers that we didn't get to cover some of this. If I didn't, I don't know, put Reggie in too much of a bind with some of the earlier questions, maybe he'll be back and we'll have another discussion. I personally like Reggie, and I really liked what he was doing with Veritaseum, even though I always questioned, the ability to make your own contract rules would be very difficult to immediately find a counterparty. And then you end up in this loop where you put in a trade you want to do, and no one is taking that trade. And in 20 minutes, you now need to adjust your own trade. This becomes a very frustrating experience. At least that's, I deal with this all the time in the options market, where I try to enter like a spread trade and I want, my perfect limit order filled in between the spreads, and it doesn't get filled. And then the following day, the price of the underlying moves. I want to take on a spread, but now I need to adjust my strikes of the spread because the underlying has changed in value. So now I need to adjust. I constantly adjust trades. I do this a couple of times a day even, because I want that perfect fill that is totally like neutral in the case of my option spreads. But in the case of this, if someone immediately doesn't take on your trade and it goes against you, you may not want to do that trade anymore. And if it goes in your favor, no one is going to take that trade. You need to go ahead and adjust it. So I always had some issues with the Veritaseum platform in its original form, but now with the addition of an ICO token and the Veri token, I don't know. I'm personally a little nervous about the project. But let's see. I will give Reggie a few more minutes, and if he doesn't come back, we will cut this video. But since we do have live viewers, about 85 live viewers, do you guys have any other questions? Also, as a live viewer, this is your chance to comment on how do you like this on the record podcast. What else should I do with the format? I know maybe I need to stop with the introductions and get straight to the meat and potatoes. I think 95% of the people know Reggie Middleton's backstory, and we just got to jump right into it because time is always limited and there's more questions than answers. All right, so live viewers, any questions for me on this interview? I don't know if Reggie's going to come back. Like I said, he did. Okay, so I got a text from Reggie. He will be back in about 5-10 minutes. Yeah, if he can come back in like 5 minutes, I'll grab him for like 10 more minutes. Yeah, but Reggie's a busy guy. If I tell him that, hey, let's do an interview for 2 hours, he would have probably said no, right? Even though I know him. It's not easy for people to give up that kind of time. I'm not exactly Max Kaiser or Joe Rogan here. So, um, but yeah, it's possible Reggie will come back in like 5 minutes, and I'll ask him the rest of the questions. But we'll see. Got like these ICOs are popping up faster than I can even be aware of them. Like ICOs come and go before I even heard of them. So. Um, I don't think Bitfinex is the next Mt. Gox. I think Bitfinex is fully solvent. Now we're getting way off topic here. I think Bitfinex is fully solvent. They're just having a bank problem. Now, if the bank confiscates their cash, then yeah, then they'll no longer be solvent. The problem with Mt. Gox was that Mt. Gox was always in an 80,000 Bitcoin hole, and the more Bitcoin went up, the bigger of a hole they got into. So, I personally think it's a very different situation, but I don't know the details. I've never even used Bitfinex, so I'm just speculating here. I've always thought that Tether should never be one-to-one, because Tether it's risk. You have money sitting in Taiwan. I've explained this to many prominent people that if your assumption is that Tether has no risk, your business might be in trouble. No, wow. This is like way off topic. Uh, Personal questions to me can be reserved for my show. I'd answer it. It's just not the time or the place. I actually have to go myself, so my time is pretty limited. So it's possible we may not get to Reggie. Um, I just texted him, letting him know. Yeah, I mean Reggie's definitely not avoiding me. I mean he did. I knew he had to run because he had another call coming. Well, it looks like some of you don't understand the concept of Veritasium. Well, I understood the concept of Veritasium pretty well back when it was originally proposed, and it's basically a peer-to-peer credit contract for difference platform, where you get to, exchange the value of an underlying asset. So this is why I brought up one broker, and 796 is doing this, and some of the other ones. If I want to buy the S&P 500 and you want to sell the S&P 500, you and I can enter into a contract where at the end of the contract, we just exchange the difference in the value that the S&P 500 moved during the time of the contract. And we exchange Bitcoin for this value. And he was building a decentralized platform to do that, to cut out counterparty risk. I can't answer that question, right? That's a question for Reggie. The question is, why is the value of the Verit token going to be better for a shareholder upon take up, especially when it goes hand in hand with Ethereum? I mean, it's initially priced in Ethereum, just like Ethereum was initially priced in Bitcoin, and then it starts trading off on its own, right? So it could go up or down. All right, guys, I think I'm going to have to end it here. I'm going to let Reggie know that we had to end it because I got to run, and maybe we'll pick it up another time. All right. And thank you for tuning in to On the Record. I'm not sure who our next guest would be. Maybe it'll be part 2 with Reggie, probably not. And I'll find someone else, probably someone else running an ICO, and we'll talk to them about their ICO as well. It's a lot harder for me to do these with people that I actually know and like versus people that I don't know prior to the interview. So there you go. So let's see who the next one is. I'll be as surprised as everyone watching. All right. Once again, I'm Tone Vays. You can find me on Twitter as Tone Vays. My website is libertylifetrail.com, and I do have my own podcasts under my own YouTube channel. You can just Google my YouTube channel as Tone Vays, where we talk economics, trading, and pretty soon I'll get back to the Crypto Scam podcast. All right. Thank you all for tuning in here on the World Crypto Network.